to another episode of Money Talks and Bullshit Walks, a place where we discuss all things business and money. I'm Manny Skevofilax. I am an outsourced chief financial officer and business therapist. Today, I'd like to discuss the statement of cash flows. I'm going to pull up a sample template and I am going to take you through a very simple example. The important thing for a business owner to understand about the statement of cash flows is that it gives you a snapshot of how the cash is moving around in your business. Don't expect to get it on the first try. It takes time, but with repetition, you'll be able to get some better understanding and value from it. There's three components to it as we jump in. There is the net cash provided by operating activities, net cash provided by investing activities, and net cash provided by financing activities. So what happens here is you start here. This is actually called the indirect method, but I'm going to leave a lot of stuff out because I want to keep it as simple as possible. So you would start with your net income and you would add in any non-cash expenses and changes in your balance sheet. Those are your reconciliation items. And if you notice, once you put these reconciliation items in right here, they're actually negative. So this first number right here, you add everything up, including this net income, it's going to be $850,000. So this is net cash provided by. Sometimes it can be negative, in which case you would hear the term net cash used by operating activities. In this example, it's positive. So this is also known as being cash flow positive. Anytime you hear a company's cash flow positive, that means they have positive cash generated from their operations. The next piece of this is investing activities, which is going to show you, in this example, that you invested $50,000, that's why it's a negative, in furniture and equipment. And you also invested $100,000 in building and leasehold. And then that's offset by $30,000 in accumulated depreciation. You add the three of those up and you get net cash. This is actually negative, so it really should say net cash used by investing activities, $120,000. So let's just hold that right there. So we've got $850,000 provided by, minus 120 here. When we go to the third category, that's called the financing activities of your business. And this reflects the principal payments that are made. Only principal. You've paid, in this example, $80,000 in principal payments on a note payable that you have. And you paid another $15,000 in principal payments on a vehicle loan. So going out, net cash used, not provided, because it's negative, was $95,000. Now, if you add these up, the three of them, the 850, the minus 120 and the minus 95, you come up with a net cash increase for the period, which is great, of $635,000. So you started the year, this is a January 1st through August 31st example. So it's an eight month period. So you ended the year at zero, let's say, and you now have generated 635 for the period. And actually, I made a mistake. You started the period, that's this little calculation down here. You started on January 1st with 300,000. You generated an additional 635. You now have 935,000 in cash. That number would actually tie to your balance sheet cash account at August 31st. And then one last thing for you. I mentioned up here that if you have positive cash from operation, that's known as being cash flow positive. If after that, and after taking into consideration your investing activities and your financing activities, like this example shows, you're still positive, that's what's known as being free cash flow positive. Hope I didn't bore you to tears. It gets easier, I promise. Thanks for tuning in. And I look forward to sharing another episode with you soon of Money Talks and Bullshit Walks.